Hello friends, so today's video is all going to be about why you need SAP. Have you ever wondered why so many top companies talk about SAP? Why it is not called SAP? And more importantly, what it can do for you. In this video, I'm breaking down what SAP is, why it's essential, and how it can change your career or business. Let's get into it. So first thing first, SAP stands for Systems, Applications and Products in Data Processing. But here is the catch. It's not called SAP. You have heard so many people calling it SAP, right? But it's totally wrong. It's not called SAP. It's called SAP. And that's how the German company pronounces it. So like SAP is the #1 ERP, enterprise resource planning software in the world. It helps companies manage everything from finance and supply chain to human resources and customer relations in one integrated system. For example, Coca-Cola uses SAP to manage inventories. NASA uses SAP for procurement. BMW uses SAP for manufacturing planning. So there are different parts of SAP called modules and each focusing on specific business functions. Like there is FI, which is financial accounting, then MM, materials management, then SD, sales and distribution, and HCM, human capital management, and many more. So over 90% of Fortune 500 companies use SAP. That means learning it open doors to roles like SAP Analyst, SAP Consultant, SAP Developers, and many more. So why you should learn SAP now? Whether you are in tech, business, accounting, or supply chain, learning SAP gives you a competitive edge. It's like learning Excel. But for global business system, if you want full tutorial and how to get started in SAP, even with no experience, hit like, subscribe, and drop a yes.
Let's look at cost center allocations. Why you need to run allocations, sometimes is called as allocation cycles. Now the word it derives from is allocate. So you know allocate means when you have something you can allocate between two or more products or lines or any type of items. So that's what the word allocate means. So we are actually deriving it from that word. So we are calling it allocation. Now some costs you cannot directly assign to a product line. For example, in our presentations we've been using the profit centers, cars, trucks, vans and vehicles. These are our main product lines. So each of these product lines will also have their cost centers where they incur their own costs. However, there are some overhead costs, for example like your CEO salary, your CFO salary, which are applicable for the entire organization, not only for those particular products. So their salaries, finance department expenses, HR department expenses, legal, IT and so on, all these departmental expenses which cannot be directly allocated to a single product. For example, you cannot say the finance department's expenses only belong to cars. You can't say legal department fees can only belong to trucks. You cannot differentiate like that. So sometimes these kind of expenses you post to their own cost centers. And then later you have to proportion or allocate all of their costs to the actual products that you are producing. So you can see the revenues, their own expenses, the allocated expenses, and see the final profitability of those products. So that's why you need to run allocation cycles. Now sometimes you call this as cost center allocation because it's a periodic activity, because it's run monthly, so we call it periodic activity. It's also called allocation cycle. So once the cycle is over for the first month, you run it again for the second month and so on. and you can rerun these cycles as many times as you want. There is no restriction in that. Let's look at our cost center hierarchy. So our company is called M&M company, and we have different cost center groups which are like our main departments. Now here I specified admin department, human resources, IT, and the product lines. Now under admin department I have my actual divisions: facilities management, legal, and procurement. These are my individual cost centers. And my product lines I have specified cars, motorbikes, vans, and trucks. So these are the 4 products that I'm going to produce in my company. And for each of these cars, motorbikes, vans, and trucks, I have created a cost center. So any direct related costs associated with cars and all these product lines will be posted over here. For example, for car assembly, you'll be having laborers, you'll be having different type of plant maintenance activities and so on. For those related assembly lines, including the parts which are required to fix the car, all those expenses are posted directly to these individual product line cost centers. And for these overhead cost centers, which are overhead means they are overlooking the entire production line, their costs you need to somehow apportion to these 4 product lines. We are looking at that via the allocation cycles. Let's look at the types of allocation that you can do in the system. There are 2 types. One is called distribution method. We call it as distribution cycle. The other is assessment cycles or assessment methods. So let's see the difference between both of them. So I put in a table format. So when you use the word distribution, it means it uses the original cost element for allocation. For example, if you have posted salary expense using the salary expense account 506000 to the cost center legal division, then when you allocate the cost from legal division to our product lines, cars, trucks, and so on, you will be seeing the same cost element coming as 501000 salary cost. So that is using the same original cost element. That means you can think of it like the same GL expense account. Now in assessment cycle, you use a different cost element. So you don't use that same 506000 account, you use a different cost element account. So you will be creating a secondary cost element using category number 42. This is used for the purpose of assessment cycles. So when you create a secondary cost element, you can specify an ID, something like 801000, and you can call it as allocation of salary expenses. So when you see the report for the cars product line, you will be seeing the original cars salary expenses, that people who work to manufacture those cars, and the allocated expenses for salary that will be coming under the 801000 assessment cost element account. We'll see these in more detail when we actually run the cycles and reports, but for now just remember the main difference between distribution and assessment is that distribution uses the original cost element, whereas assessment uses a secondary cost element or a different cost element. Now in the distribution cycle, one of the main advantage of using the distribution method is in the report that you can see the original cost in the receiver cost center. For example, in the cars production line cost center, you can see the original salary expense cost 506000 as well as the allocated salary expense cost under the same GL account, that is 506000. Whereas using the assessment cost element, you will be seeing the original one under 506000, but the allocated cost you'll be seeing under a different cost element, something starting with the 8 or a 9 or any other type which you want to specify. Now in the reports, in some SAP reports, or if you do some customized reports, you may not be able to differentiate what was the original and what was the allocated amounts, because both are going to come under the same GL account. So that is a main disadvantage over here. Whereas in the assessment method, you can differentiate, because the original expenses incurred by those cost centers will have the standard GL accounts, and the allocated amounts will have a different numbering. So you will be able to understand which are your allocated costs and which are your original incurred costs. And because you use the original cost element to use distribution, it slows down the system performance. especially if you're in a large environment, you're producing many different product lines, and you have a lot of overhead and other type of cost allocation to do. It will significantly slow down the system performance because it will be using the same GL accounts. It is to have constant tracking. By using the assessment cost element, because you're going to group one or more of these cost elements and allocate it via a different assessment account, it will speed up the system performance. So generally we use the assessment cycle method for most of the allocation of expenses for overhead costs. And in general practice also across many companies, you will be finding that they will be using the assessment cycle method. Let's look at creating the allocation cycles. Now before we actually start creating them, let's analyze the costs in the cost centers. So for that I'm going to execute one of my favorite cost center transactions, S_ALR_87013611. We saw this earlier in our cost center presentation for reporting. We use this transaction to see the costs for different cost centers. So let's execute this. So I'm just going to leave the fiscal year as it is and period 1 to 12. I'm not going to specify any cost center groups, just execute for all the cost centers and see all the cost elements. Now of course I don't have much data in the system, so then this is okay. But if you're running in a company where you have a lot of data, then I recommend you that you specify a specific cost center group or a cost element group. So now you can see these are all my cost centers in the system, and these are all the costs for them. And these are actually my product line cost center, which is cars, motorbikes, vans and trucks. They have their own salary expense and advertising expense. These are directly related to these products. So when I say salary expense of 20,000 for motorbikes cost center, it's for those laborers or staff who are actually working in that motorbikes department. And advertising expense means $1,000, means this $1,000 is directly used to advertise these motorbikes on any type of media. This same method applies for the other vehicle lines as well. And these are some of my overhead cost centers. I have just put 3. Just for example, you can see these have their own expenses like salary expense, building maintenance, electricity and so on. Similarly for legal also they have their own expenses, and procurement department also have their own expenses. So this shows you all the expenses so far allocated to these cost centers. Total I have about $253,000. And what we need to actually allocate is these 3 cost center costs to these 4 product lines. So we are allocating all the overhead costs incurred by the other cost centers to the direct product lines. So we know the actual cost of this product line as well as the allocated costs. And we'll know the revenues because we know the revenues which we have sold these items, and we get the final profitability of these products. So these are the 3 cost center costs we need to allocate. So let's just overall look at it. Now we'll use the assessment method for allocation. That'll make it much easier to identify what are the original costs and the allocated costs. So I'm going to group a few costs because I don't want to put individually stationery expense how much, office supplies expense how much, because when I look at the cars cost center report, I don't want to see those again coming up, stationery expense, office supplies expense, because I would rather see at a total like miscellaneous expense or salary expense or utilities expense at a higher level. I don't want to go to the minute level and see how much has been allocated, because what I'm more interested is my direct costs and my indirect costs, which are my overhead costs. So those indirect costs, another word used for overhead costs is also indirect costs. So those indirect costs, I would rather see them at a higher level. So let's group these cost centers, these cost elements into assessment cost element groups. So I'm going to put 501 000, 502 000, these all stationery office supply expenses. I'm going to call this as miscellaneous expenses. I'm going to group the 503 000, that is a building rental expense, and the building maintenance expense 505 000, and I will call it as asset related expenses. And then I have electricity and water usage, so I will call it as 504,000, 507,000. I'll call it as utilities expenses. And what will I have then? Salary expense. I'll just call that directly as salary expenses. Of course, I won't have any advertising expense against these cost centers. Advertising expenses are always against these product lines, so I'm not going to specify this advertising expense. What I'll do is I'll just call all the other as other costs. Okay, so let's look at my. Okay, so all these cost elements I'm going to specify, so this will also include this and any other cost elements will be coming under this group. So I'm going to create my cost element groups. So creating these cost element groups will be easier for you to later allocate the cost, and when you create the cost element groups you need to specify these individual cost elements also. So when I'm actually going to allocate the cost, when I'm going to see under my cost center product lines, I will see these words only: miscellaneous expense, asset related expense, utilities expense, salary expense, and other costs. So these will be my assessment cost elements, and I'll give them a different ID also, something starting with a 8. You don't have to start with 8, but I'm just going to use the number 8 to start with, and they will be listed below, and the allocated cost also will be listed below. So in the system you don't have to go to the individual detail level, because you're going to get to the higher level. It will actually speed up the system performance, and your report also will not be long. Just imagine if you're having a cost center report for your cars product line, that itself will have about a few probably about 20-30 line items over here, and you don't want to also see the overhead line items for another 20-30 line items. So that's why you're actually grouping it, just to put it into a few line items, like 6 line items at most. So now let me go and create these cost element groups. I'm just going to go to accounting, controlling, cost element accounting, master data, cost element group, and create. Now you can create as many cost element groups as you want. So I'm going to create the first one. Just going to copy this here. Now here I'm going to give it a different ID over here. So I'm going to say, just to keep it consistent, I'm just going to call it as EXP01 and put miscellaneous expenses, and inside that I'm going to put the cost elements, these two, stationery and office supplies expense, and save this. So like this, so this is my cost element group. You'll get a message saying that it's saved in the system. I'm just going to click on save here again and go back. So like this, I'm going to create another one for EXP02, and I'm going to call it asset related expense. Just paste it over here. In that I'm going to create the cost elements and copy this and put this over here, press enter. Those two expense accounts are coming, and save. So I'm going to create the next 3 or 4 cost element groups. Now how you want to allocate these expenses and how you want to create these cost element groups, these are all should be provided by the business. As a consultant you can only recommend, but how they want to actually see in the allocation reports, or how they want to allocate, how they want to group these expenses, these all should come from the business, because they should be knowing how they want to allocate and how they want to see in the report. Of course, as a SAP consultant you can recommend which are the best practices and what's the easy way to do it, and so on, those recommendations that you can do, but business should come and tell you which elements to group, how they want to see it in the report, what are the line items to see, and so on. I have just nicely formatted what are the cost elements that need to be created into cost element groups. So these two will be creating as cost element group EXP01, which is just created now, EXP02, EXP03, EXP04, and this one for EXP05. And I have given a description for each of these cost element groups. Now when you're actually going to do the allocation, we need the assessment cost element. So I've also created corresponding assessment cost elements also. For this cost element group, I have created an assessment cost element 801,000 allocation of miscellaneous expenses. Just using the same word, but just putting allocation of and allocation of just in front. So we know when these elements come up in the report for cost centers, that this is coming through an allocation of miscellaneous expenses. And this assessment cost element will link up with this group over here. We'll do all this in our actual creation of the assessment cycles. Now to create the assessment cost elements, we already saw in the cost element master data, but again I'll just quickly show you that. Go to accounting, controlling, cost element accounting, master data, cost element, individual processing, and create secondary cost element. The short transaction code for this is KA06. I'm just going to execute that and type in this 802, put a validity date, and I'm just going to give the description over here, paste that also here, and cost element category is 42 for assessment cost element, and save. That's all. It's very easy to create an assessment cost element. Similarly, I'm just going to do for the others also. Copy this, put number 42 here and save. Do for this as well. And just copy from here. And the last one over here. Just copying the last one for the costs and putting the cost element. Now we have created all your 5 assessment cost elements, so the report will display these cost elements now. Now it's time to create the actual cycle. Now let's start creating the actual assessment cycles. You need to come to the SAP IMG menu path for this, and the menu path is controlling, cost center accounting, actual postings, period and closing, assessment. Now this is where you can do either distribution cycle or assessment cycle. What we are going to do is an assessment cycle and maintain assessment. The short transaction code for this is KSU1. KSU1. The assessment cycle I'm going to do is one of the most simplest form of assessment cycles. We're just going to allocate from these overhead cost centers to our product cost centers using some percentages method. Now with these assessment cycles, there are also further complicated settings which you can do, but for you I'm just starting off with the most simplest format. That's what we'll do in the scope of this presentation. So you can itself go and create these cycles and practice using them. So let's execute this maintain assessment cycle. And we'll come up with 2 options, create and change. We are going to actually create now. And that will bring you to the screen over here, and you need to put a cycle ID. So we need to give an ID over here, cycle ID. So I'm just going to call this as assessment cycle. So I just start off with an A, and I'll just call assessment cycle, and I'll put 01. Just you can give any ID over here. I think we can give up to about maximum 6 characters. So you can just give the cycle ID over here. And you can give a start date, so when this cycle should start from. So I'm just going to give it from a beginning of a fiscal year. So my fiscal year is from July to June, so I just probably give it from a fiscal year from 01/07/2015, or you can give any other time you want. So I'm just going to start it from my beginning of the fiscal year. And you can also, if you already have an existing cycle, you can also copy it from that, but we're creating a fresh one. So I just given the cycle ID and the start date, and I just press enter in your keyboard. And you can see the screen will pop up over here, and automatically system has calculated for 1 year, saying that this cycle is valid for 1 year, and you can see a date given also here. But you can also change these dates. I'm just going to give it a further like 2020, so it's valid for about 5 years. Of course, you can always come back to this cycle and close this cycle and create new cycles, or change these dates whenever you want. So I'm going to give a text field over here. So this text I'm going to call it as overhead cost allocation So that's my cycle text description over here. I'm just going to give that. You can see there are many different fields given over here. So which part of the field, what's the currency and so on, all this. But I'll just explain you one field over here, which is the iterative field. It's always best to tick this. So what this actually iterative field does is, sometimes you might have a few cost centers and you might allocate to another set of cost centers. And from that cost centers, you'll be allocating to another set of cost centers. And from that cost centers, you might allocate back to the original cost center. So this is kind of going around the cycle and allocating and allocating and allocating. This you need to tick the iterative section over here. So all the costs will finally get allocated. Just to keep it more simple, if I say from cost center A, I'm going to allocate 60% of the cost to cost center P and Q as 40% and 20%. Similarly, I'm going to allocate it again to another cost set of cost centers. So where is the balance 40% of the cost for this cost center A, you need to again allocate it. So to do that step of the system to reallocate it again, you need to collect it, you need to set this iterative indicator. It's like a loop to make sure that all the balance costs are going to get allocated. But usually when you do the allocation, we just straight away allocate all the 100% of the costs. We don't need to select, we don't actually divide by only allocate 60% first and then later 20% and later 10%. We don't do like that. So but no harm, just leave this as it is, as iterative indicator ticked. Then you have other fields called derive functionality. We're not using any functional, just leave that blank. And there's something called cumulative, which means this uses something called a tracing factor, which is like a statistical key figures, which will be later discussed in our presentations. The statistical key figures is something like you enter values and based on that system will allocate. So rather than entering percentages, 40%, 30% and 30%, you can actually enter values. These values can be based on revenues or number of units produced or number of staff, number of square meters of floor area and so on. So different type of statistical key figures that you can enter and the system will allocate based on those key figures. And sometimes these key figures for 1 month it will be different and next month it will be different. So when you do a cumulative option, you can define whether to do from period 1 to 12 or just period by period and so on. So that's why this cumulative indicator is useful, that if there's any previous values which are not allocated properly or different methods of allocation are used, when you use a cumulative method, it will actually allocate all throughout the whole entire set period range. Again, this is going a bit more further technical. We'll just keep it simple. Leave it as it is, the iterative indicator on, and click on attach segment. This way we're going to actually create the first segment of our cycle. So you need to give a segment name. So I'm just going to call it SEG1. Just give it an ID like this. And this is my overhead cost allocation. So I'm going to first allocate it the miscellaneous expenses. So I'm just going to copy that. Allocation of miscellaneous expenses. And what is my assessment cost element? I'm going to use 801,000. I'm not going to specify any allocation structure over here for now. Just leave that blank. Sender rule posted amounts share in 100%. This way I mentioned early in the iterative indicator on that you can decide whether you want to only allocate 60% or 80% and so on. But I'm just going to allocate total 100% over here. And leave this setting as it is. Actual, variable portions, fixed amounts, fixed percentages, fixed portions. So I'm going to give fixed percentages. So instead of putting in some amounts, I'm going to give the percentages over here and we'll directly allocate based on the percentages specified. This is the most simplest form of creating the actual assessment cycle. So I'm taking you through that method. So just enter the assessment cost element number over here, make no changes here and click on fixed percentages over here. Then go to sender and receiver. So sender is the cost centers which are going to send from. Receiver is the cost centers which are going to receive from. So sender cost centers is all our overhead cost centers. So you can specify a range from this number to this number, or you can give a group ID also. Now we do have groups created in our cost center master data. Remember, under 101 is all our admin cost centers. So I'm just going to select that group itself. Of course, you can always go to cost center groups and create your own groups also. And what are the cost elements under this? So we just created a cost element group, that is EXP01. So I'm just going to select that. and what are the order. So the receiver can be internal orders or cost centers or functional area. We're not looking at functional area, we'll just look at cost center to cost center allocation. So who are my receiver cost centers? Are my product lines. So let me go and select my receiver cost centers, my product lines over here, P01. Under that, my vehicle product lines are mentioned over here. Then go to the next one, sender values. So again, we're going to send all 100% of the cost we're going to allocate. So just leave that as it is. And receiver tracing factor. So what's the percentage we want to send to this? Now this one also has to be provided by your company, how they want to apportion the percentages. It can be either revenue, it can be either number of people involved in this particular plant, or the number of units sold, and so on. So I'm going to decide on my own. Okay, I will base this based on revenues. So let me check the revenue for these 4 product lines. So I'm just going to quickly go over here, create new session, and I'm going to run the report. This one is _PL _ the GL balances report, which gives a nice format. So currency type, I'm just going to select the company code currency, enter my company code over here. Account number, I'm going to specify 401000. That's my GL account number which I want to see. This is my revenue account. And ledger is at 0L ledger, fiscal year 2016, from period 1 to 12, and execute. And the report will come up like this. It's coming based on segments. I'll just switch segments to profit center. So just click on segments and profit center. And I can see now 4 items are coming here, and I got 4 of my revenues here. So cars should be allocated 100,000, motorbikes 15,000, vans 20,000, and trucks 300,000. But I have specified here as percentages, not amounts. Of course, you can also go to segment header and change it to amounts. So you can directly enter the amounts also. But we'll do it on percentages, so just a bit more easier to understand by percentages. So 100 over total of all those 3, and this one motorbikes is 15 over all those 3, and van should be 250 over all, calculating all against all 4, and truck should be 300,000 against all 4. So to do that, I'm just going to use my Excel format here. Cars 100,000. Just type it in like that. I'm just going to copy the rest also like that. And just copy here as well, paste it here. So here I'll get the total, that's 665,000. Now I'll try to get the percentages over here. Just put the calculation. Okay, so I roughly got the percentages over here. This is about 15%. Let me see if I can get it in the percentage format. There it is. So 15%, 2%, 38%, 45%. So everything should have to 100%. That's the important thing. So I have entered the percentages over here. Now I'm going to click on save the cycle. So you can always check the cycle whether everything is okay or not. So just go back to segment header, and you can see this indicator saying formal check. So if you click on this, it will check if they make sure that any things which you have entered is incorrect or not. For example, you might not have entered the cost center and created on, or this receiving tracing factor is not adding up to 100%, and so on. All those things will be checked. So just click on formal check over here. And if you get a message saying formal check was successful, then okay, then you can proceed to save this cycle. So just click on save and press OK to continue. And you will get a message saying cycle has been saved. Now we need to create more segments. So this we have only done for miscellaneous expenses. We'll do for the others also. So let's quickly do that. So you can click on attach segment. Now I'm just going to go a bit more faster. Segment 2, copy that here, put the assessment cost element here, and select fixed percentages. Go to sender receiver group 101. The cost element group also we have created this one, so put that over here. The receiver cost center group, I think it's P001, sorry, P01. So select that and receiver tracing factor and put these percentages over here. Just type it in without percentages. 15 to 38 45. So just copy that. 15 to 38 45 and save and press OK to continue. Okay, so you have done the second segment also. So like that, attach the other 3-4 segments, which I'm just going to do now, and we can complete the cycle. Now that you have created your cycle, you can actually start to run it. If you want, you can always go and display the cycle. To create, we use a short transition. You can also use a short transition code KSU1. To display or to change, you can use KSU2, that is to change, and to display is KSU3. So just enter your cycle name and the start date over here, and you can see the first segment what you have entered. All the information is over here. I can just go one segment at a time. So let's see what's the receiver tracing factor. Everything is okay here. If you just click on this overview segment, it shows you all the different segments over here, 1 2 3 4 5, and what are the information you have entered. And press OK. You can even attach further segments over here. Let's go to segment 1. You can always check. You can see format check was successful, message is coming, and we'll just exit the transaction. Now we do not know any changes, so we'll just leave it as it is, and let's start actually running the cycle. Now to start running the assessment cycle, the short translation code for this is KSU5 assessment over here. It's under the menu path controlling, cost center accounting, period and closing, single functions, allocations, and KSU5 over here for assessment. So let's execute this transaction. So you need to mention from which period to which period you want to run for. So I'm just going to put from 1 to 12. Just run for the whole year. And you can do a test run also before you actually start running. Now here you can actually include multiple cycles and run at the same time. I'm just going to include my one only over here. And they're asking you to maintain a number range for controlling area for this particular transaction, RKIU. So if it is the first time you're going to run, then you'll have to do this transaction. Just double click on that, and it's saying check the number range assignment in your controlling area. You may do so in customizing for cost center accounting. And for this particular transaction RKIU, that is a code over here. For this we need to keep the number range. So every time you do assessment cycle, it creates a document also here. That's why it's requiring you to do the number range. So let's go and set that up now. So I'll quickly show you how to do the CO document number ranges for assessment cycles. The short translation code is KANK. This is for all the CO document number ranges. Enter your controlling area, click on groups, then search for that particular transaction code RKIU, which was there in the message, and click on that. And then you can allocate this to any type of groups over here. So just click on that, click on element group, and select which group you want to allocate to. Make sure it has a number ranges assigned. I'm just going to use it against the planning group, so just double click on that and click on save. Then you'll get a message saying changes have been saved. Now most likely if you are in a different client, if all the number ranges have been maintained for your controlling area, then you don't have to perform this step. But if you're doing it the first time and there's no number ranges maintained, it's always much easier to copy it from a general controlling area like 1000. This was already provided by SAP to your own controlling area. But if there's already number ranges specified for your controlling area, you will not be able to do that transaction. That's how you go and specify document number ranges for controlling areas. Now let's go back to actually running the cycle. Now this is our screen which you use KSU5 short transaction code. The cycle name will come up over here. And you can run it periodically, or you can put a 1 to 12 period also. So for now we'll just run it periodically from 1 to 1, and then later you can even try it on from 1 to 12 also. And here you can go to extras and go to cycle and display the cycle, make any changes also directly from this transaction code also. And we'll just do a test run over here. So click on execute, and you'll get a message like this coming up over here: number of senders, number of receivers, and number of messages, and so on. You can see who are your senders. These are your sender cost centers, and how much is going to get allocated, and all those information will come up over here. And you can click on warning to see what are the error messages, to see no valid sender entries were found. This means that because there were no postings in the month of July, I think, for those particular senders, that's why you're getting those warning messages. Leave list. Yes. Now if you're happy with all the settings, you can actually do actual run also. To do the actual run. So now I'm going to perform the actual cycle run. Just execute this. So I'll be just running for each period. I did 1 to 1, I'll do for 2 to 2, I'll do for 3 to 3, and just keep on executing till you're in the current period. Of course, you can always do from 1 to 3 or 1 to 12 also. I'm just doing it one by one, and we're getting some number of senders, number of receivers, and so on. You can see the warning message, most likely saying no valid send entries were found. If there are no entries in those particular cost centers, then you just get these messages. As long as there are no error messages, you can just ignore this. And you can see the senders. Who are your senders, how much amount was sent, who are your receivers. Receiver, just click on any entry over here, and then you click on the receiver item and how much was allocated, and so on, based on the tracing factor. So all this information you saw earlier will come back, and you can see the cycle details. But rather than seeing from here, it's always best to go and see in the cost center reports, so you can see the actual values coming in over there. Now we can go to your cost center report, which is this one over here, which you executed earlier. Let's see this report now, and just leave as it is from period 1 to 12 and execute the transaction. You can see all the information over here. So let's break it down by each cost center. First, let's look at facilities management. So earlier when you ran the report, we only saw all the debit entries. Now you will see some credit entries also. So these are the amounts have been allocated. So these are all the original costs incurred by this particular facilities management cost center, and these are all the amounts we have allocated to our production cost centers. So you can see allocation of miscellaneous expense 16,000. This is made up of these two cost elements, which we specified in our cost element group against this particular assessment cost element, and in our cycle we specify that cost element group also. So system is deriving all those information. So this 16,000 is made up of 9 plus 7,000, 16,000. Allocation of asset related expenses 13,000 is made up of building rental expense 9,500 and building maintenance expense 3,500. Allocation of utility 7,000 is coming from the electricity expense, and the salary expense directly coming to allocation of salary expense. So total 56,000 which have incurred in these overhead cost centers, 56,000 has now been allocated to the other production lines. So let's see for legal, again 15,000 original expense. Now you can see allocation 15,000. So similarly for procurement also, you can see all this 33,000 has been divided into 3,000 is made up of this and this for utilities expense, and salary expense 30,000 is coming. So all the overhead expenses have now been allocated to these four cost centers. Now let's go and check these four cost centers how the amounts are coming in. So you can see for cars, they had two original expenses, that's your salary and advertising expenses, that is using these GL accounts. And now you can see all the allocation amounts coming in here. Miscellaneous expense, asset related expense, utilities expense, salary expense. By using these assessment cost elements and with the description we are given over for these cost elements, we can directly see how much amounts have been allocated. So you can actually prepare reports using these separate custom reports. You can see original costs and you can see allocated costs. So total is coming to 67,600. Same way for motorbikes also, you can see all those four elements coming in, vans and trucks. So this is how the cost center cycle works. You can see from the assessment cycle, we took all the costs from these three overhead cost centers and we allocated to the other four cost centers, which is our main production lines. Now we saw how to create an assessment cycle. So you also can start practicing creating on your own. So create the assessment cost element first. That is a important step. And then you can create your own cost element groups. You can even create some cost center groups if you want. And then start creating the assessment cycle. The short translation code for this is KSU1. Just like we saw in a presentation, you can have many different segments, specify the assessment cost element, specify the percentages, and create those cycles. Then you can actually run the assessment cycle. You can run it from period to period, or you can do it for a whole range of period also. The short translation code for this is KSU5. Now creating the assessment cycle takes a bit of time, but once you have already started creating, you can use it over and over again for a number of years. So it's not a monthly activity. Just running the cycle is only a monthly activity. And remember, creating assessment cycle is part of the configuration part. So you've got to create it in your development server, and then later you can transport it to your production server.